Hello, guys. Welcome to the first episode of the CambridgeStocks podcast. Today, we'll be speaking with Hossam Uddin, who's currently working in Lloyds Banking Group as a graduate analyst. Let's get it.
Hi, Hossam. How are you doing today?
I'm good, Daniil. How are you?
I'm good. So can you please tell us about yourself? Where you studied, where you're at now?
Yeah, sure. So my parents are immigrants from Bangladesh. They moved to the UK in the 1980s, and my father he's a teacher, and my mother she hasn't worked, so she's pretty much been in a sort of domestic role her whole life. And I grew up in East London. I went to school in East London as well. Did my A levels here at school, and following my A levels, I was at PwC for 6 months, and that was what they call a school leaver program, which is basically where you kind of join straight out of school, and they train you up. They give you a qualification, which usually the chartered accounting qualification. You work at the same time, so effectively it's an alternative route to university. And it was something that my school would encourage, some of us to look into, sort of students to
Was
look
that
into.
what
So
was
that's
that was that a public school?
state school, yeah.
State school.
So yeah, state school, government run state school. And so I just applied. I thought, why not? Got an offer from PwC for the school leaver program in tax. So I thought, yeah, let me give it a shot. It was 2 years long initially, and I thought, if I don't like it, I can go to university after 2 years or after a year. So I went on to this program. I did 6 months in private clients tax, which is basically where you're doing tax returns and tax advisory for high net wealth individuals. These are sort of CEOs of companies, partners at private equity funds, etc. So very lucrative individuals who have to publish a tax return every year. So that was the team. Did that for 6 months, and I thought, you know what, it's been good, but I want to keep my options open. So I thought, let me go to university. So I applied to university. I left PwC on good terms, and I applied to university. I ended up choosing to study mathematics at Queen Mary University of London. So I started that degree in 2016, and during university, good thing about PwC is that it gave me an insight into finance before I went into university. So I kind of knew that I wanted to work in finance, and I knew that because I was at PwC being a big four, they do all sorts of services. So although I was in tax, I knew about audit, I knew about consulting, I knew about deals, advisory, management consulting, strategic consulting, etc. And I knew that finance is huge, and all these different departments and divisions. And I thought, I'm interested in finance. I don't know which part yet, but it's something that I can discover. So at university, in my first year, I did a Spring Insight Week at JP Morgan within operations, and I did a first year internship at HSBC.
Did you apply straight away when you got to university because you knew about because of the experience?
Exactly, because of PwC. So the good thing about PwC is that when I was there in my team, there were graduates who just finished university and joined PwC same time as me, whereas I joined as a school leaver. They had joined as graduate, and they had gone through the university route, and they knew that, they knew about Spring Insight Weeks, they knew about internships, and they warned me whilst I was at PwC that, when you start university, make sure you apply to all these things, and they gave me that sort of head start and the insight before, which is really helpful. So I kind of knew as soon as I joined university that this is what you need to do, and I think a lot of students don't know when they first join university, and that's where they miss out. So that's something that definitely helped me. So I did the Insight Week at JP Morgan for a week in April, and then in the summer of first year, at the end of first year, I did an internship at HSBC in commercial banking, wealth management, and retail banking. So it was 8 weeks long, 4 weeks in retail and wealth management and 4 weeks in the commercial bank. So I did that for 8 weeks. Again, that was really good. Good thing about that is the 4 weeks where I was in the commercial bank, I was in the main office, which was in Canary Wharf, so London's financial district, and they're in the massive tower where they have pretty much all the different teams there, including the investment bank, the asset management arm, the commercial bank. For me, that was good because I could network a lot with different teams within the investment bank and the asset management arm. And that's where I think during that internship is where I really got clued up about banking. And I knew, I spoke to sort of people in the investment bank, ranging from analysts to managing directors. And I met with them whilst I was in the office. And I learned about all the different teams within investment banking and asset management. And when I went into my second year of university, I knew I had a much more clearer picture of what I wanted to do, and that ranged around sort of investment and corporate banking side of things. So in my second year of university, I applied for investment banking internships, and I managed to land one at RBC Capital Markets in the investment banking division.
Did you apply specifically for investment banking or other divisions?
So I definitely applied for other divisions as well. So I didn't put all my eggs in one basket.
Mm-hmm.
I applied to investment banking and asset management. So I said I applied to those two. So that was good. And I ended up with a few interviews and two offers, because I converted my HSBC internship from first year, and they offered me a commercial banking internship in second year as well. So I had that as backup. And then I got the investment banking internship at RBC. And I was placed on the industrials desk for 9-10 weeks. And that was predominantly industrials M&A. So it would be aerospace, automotive, manufacturing, and other sort of industrial services and industrial type companies that we'd advise. That was a good internship. And I headed into my third year. Then I had to apply for graduate programs. And again, when you get to third year, you realize that when you start applying for graduate programs, you realize that it's a lot more competitive, because when you're applying to an internship, you're already competing against second year students who are applying for internships, or you're only competing against students who are applying for internships, who are qualified for an internship. Then you get to a graduate scheme and you're competing against those who are graduating, those who have already graduated and are still applying for graduate schemes the following year. And you find that your chances decrease a lot, because the competition is now more than when you were applying for internships. So it gets a lot harder. And I went through various interview rounds at different firms. And even though I had internships on my CV, it was still tough to end up landing a job. And I ended up getting an offer at Lloyds Banking Group on their graduate program, which is a mixture of corporate banking and markets. And they basically package that up into one graduate program. They offer rotations across those divisions for over 2 years and 4 rotations, 6 months each. So I've been there for the past 10 months on my sort of first rotation. So effectively, we were meant to, do 2 rotations, but because of COVID, our second rotation was cancelled, and we ended up staying in our first team, and we'll next rotate effectively on the third rotation. So I've been at Lloyds for the past year, and I've been in a team called Broker Development, which effectively sits in the commercial and the corporate bank. And it's an interesting team because although I've done internships in banking, this was one team that I'd never heard of before.
Are you so far enjoying this team more than like your internships in investment banking and other divisions that you did at HSBC?
I think it has its pros and cons. So for sure, investment banking had the work there was, I would say, more interesting, more strategic, more based on the advisory. But in this role, it's more focused on lending. But so it's not as broad as investment banking for sure. However, the cons, the pros are better sort of work-life balance, better hours, more responsibility at the junior level, more exposure to clients. So if I just explain what the team does, effectively, they operate in the commercial finance broker market. So the broker market, brokers are people who are effectively middleman between two different sides of a transaction. So you could have, for example, a mortgage broker who helps someone find a mortgage with a bank, and you could be the individual buying the house, and you've got the mortgage broker in the middle who's helping to link the transaction together. Likewise, an investment bank, there's a similar thing. The investment bank, you've got the client, and you've got so if, for example, in M&A, you've got the client who's buying another company. So one corporate buying another corporate, you've got the bank in the middle who's effectively brokering that transaction. So it's a similar sort of concept. But here we've got sort of companies who are looking for funding, corporates who are looking for funding, and they're looking for the best terms, the best pricing, the best structure, etc. So they'll go to their broker and they'll say, look at the market for me, look at all the different lenders, all the different banks in the market, and bring me back the best deal. And that's effectively the idea here. So a lot of it tends to be real estate finance, and you have investors who are limited companies who have portfolio of properties, both residential and commercial. Residential being student accommodation, HMOs, sort of properties with multiple tenants living there. You've got hotels. You've got, on the commercial side, you've got limited companies who have own buildings who they let out to businesses. They let out they have their own hotels, etc. So these guys have massive portfolios, can be into the hundreds of millions of pounds or even more. And if they're looking to purchase a new asset, a new real estate asset, they'll look for funding. They're often looking to refinance as well. So they would have had a facility with a previous lender on a 5-year term, for example, and that has now come to an end. So they're now looking to refinance that debt to another lender, and they'll look at the market for the best terms. So that's the idea. And effectively, our team, we have a panel of brokers. We've got a panel of the team's 8 in London, eight people, and we've got a panel of about 150 brokers. These brokers will bring us deals, effectively transactions from their clients, and they'll say, I've got this client. He's got, for example, he's got a property portfolio of 100 million or 50 million. He's looking to acquire a new asset for, say, 10 million. What can you lend? What terms can you offer? What loan structure can you offer, etc. They'll go out to a few different banks. They'll get offers for the client, and the client will pick the best offer. And that's the idea. And these are all new to bank introductions, new to bank clients. So they're not an existing client of Lloyds Bank. If they were an existing client, of course they would just come straight to the bank rather than to the broker. And so the idea is if we offer them terms and they like the terms, we'll transact the deal. This will be known as the new to bank client, the first deal for that client. After the first deal, we'll onboard the client into one of the relationship management teams. And from then onwards, that client will work with the bank and their relationship manager for any new loans or any banking facilities that they need. And we'll move on to another new to bank client. And so effectively it's broker development, but at the same time it's business development because it's bringing in new clients to the bank. So that's the idea of the team.
And I presume right now in the time of COVID, it's an essential role for mid business and small businesses to be able to refinance. How would you react to those who say bankers is unethical when you're going into the tube in London? Obviously not now because you're working from home. When we used to go into the tube in London, a lot of the time in City of Canary Wharf, you see on the headline of the newspaper some negative comment about bankers and this and that. How do you react to that? Because as we know, like let's take 2008 for example. Collectively, bankers were at fault, but we couldn't pinpoint a single banker. How do you react to those comments? What do you say to those people?
Yeah, no, I mean, I think it really depends on the bank. It really depends on the sort of transaction that's happening at hand. For sure, there are times where banks have been in the wrong. They've been on the edge of regulations, laws, etc. But I think you'll find, so with any industry there will be a side which is pushing the boundaries. Not just banking, but likewise in any corporate. Any corporate, they could be caught up in any sort of scandal. For example, if you look at Boohoo, a clothing company who have just been through, exposed for the labor practices, and so on. So I think with any corporate, in any industry, you will find some who have been involved in scandals, and that's the same for banks. Now, what people don't look at is the positive side of what bankers are doing, and I'll give you an example of COVID. So, for example, with COVID, of course, businesses were closed, and they couldn't stay open, and businesses have debt, they've got costs, etc. If they can't find lending at the point of COVID, they would have become bankrupt and just shut down.
Yeah.
And what we've seen at this time during the COVID lockdown period is that the government treasury department has brought about certain loans, which are called coronavirus business interruption loans, i.e.
Yep.
CBILS. They brought out something called bounce back loans, which is for small businesses, and they brought out all these facilities, the treasury, and it's government backed money, but the government is not lending that money; it's coming from the banks. So it's really a joint program with the UK banks, for example, Lloyds, Barclays, NatWest, British Business Bank, etc. And during this time, for example, the CBIL loan, the coronavirus business interruption loan, it's a loan of up to sort of £45 million for any business, turning over a certain amount. And it's a 6-year loan effectively. The first year is interest free. The government pays the interest, and it's capital fee, capital repayment free. So you're not paying any interest, you're not paying back any capital. Effectively, it's free money for the first year. And then following the first year, the next 5 years, you pay back the loan at a pretty low interest rate of around sort of 2%. You've managed to get that funding at a crucial time in a very quick period, often in a matter of days. And this is, it wouldn't be possible without the banks dipping into their balance sheet and offering the funds up for clients at a very high speed. So I think that's just an example of where banks are certainly helping the industry, helping the community, and helping the country as a whole. And with these CBIL loans, you would have found that it wasn't the large corporates that were getting these loans. It wasn't sort of the Tesco's, the Sainsbury's, the £500 million revenue companies. Rather, it was the small, mid-market, and small and medium enterprises that are really providing, homegrown companies, smaller companies that are providing a service to the public, people in the UK. And really, these businesses are the backbone of our economy. So you could have 5 big businesses, but at the same time, you've got 5,000 small businesses that are, really boosting the economy. And being, as a bank, being able to help them at this time was key. And it's also, just an example of how sort of banks are able to really bring value to the community and effectively hold up the economy at a time where there was a lot of damage happening.
Yeah. So, yeah, I would be interested to ask. I presume in your division you haven't seen much layoffs because it's essential to function of the UK.
Yeah, absolutely. Yep.
Let's talk a little bit about how you ended up in Lloyd's with your applications. What helped you with your applications? I know that you've been involved heavily in the Queen Mary Trading Investment Society. I brought this
Yeah,
topic up earlier with some of the other people that I had on. If you can tell us a bit more, how important do you think it is to be a part of a large society like that? I mean, we were a lot of people, and um, we were doing what I think was great for many students who wanted to go into banking or just transition. We had people from different courses. How important do you think was your role in there, and how did it help you in your career?
for sure. I think the first time I probably sat in on a panel of bankers talking was through the society when I was in my first year of university. I went to an event and I saw sort of a panel of bankers or finance alumni sitting speaking to students. And when you go to these events, you really increase your understanding of the industry, the finance industry in general. And I think something that's important to know is that knowledge is not built up overnight or even over a month or even over a year. It's built up over time, multiple years. And so when you're a first year student and you go into university and you start that journey of building your understanding of finance, and if you join a society and you stay with the society, you go to the events over the next 2-3 years and you graduate, by the time you graduate, you found that your increase in knowledge has been massive and your understanding has increased significantly because you've learned a little bit more, by going to the events. Every event you go to, you learn a new thing. You're introduced to a new topic. You're introduced to a new side of the industry, and over time, over the 3 years, over the 2 years, you absorb all that information, and suddenly your knowledge is a lot more. So it's just like if you try to study a night before for an exam, you're
Yeah,
squashing what you can. Um, but those inherently, without a doubt, those who have built up their understanding over the past year are
yeah,
in a much better position, right? It's the
yeah,
same thing. It's absolutely the same thing in this situation. Those who go to interviews, if you start preparing for your interview after you get the interview, and you only just start reading about the role at that point, then you're obviously not going to be in a good position. Whereas the person who's been researching and reading about it over the past couple of years through going to these events and so on will be in a much better position. So for sure, the society really opened my eyes about the industry by going to these events. And in my second year, I decided to take on a committee role as well. And I think this is where it helps you with networking and building your soft skills. By soft skills, I mean your networking skills, your communication skills, public speaking, um, your team working skills, your confidence in general to be able to go out
yeah,
and meet someone and say, and build a relationship with them. These are the soft skills that you need in the workplace. And these are the skills that need to come out of you, that need to be shown during the recruitment process for any job. And if you're involved in a society, you build these skills without realizing. And when you go to the assessment day or the interview, throughout the application process, they'll pick up these skills and they'll see it because you'll be showing the skills without noticing it. And that's where again, something that you pick up over time. Again, if you're going to an interview and you read the job description, it says you need teamwork skills, you need communication skills, you need relationship building skills, etc. And the night before, you're not going to pick up those skills the night before, are you? You're not going
yeah,
to come up with examples for those skills the night before. So again, it's something that you should be doing consciously, and the society is a brilliant way to do that because you're involved in events, and you're picking up these skills as you go. And in my third year, I was president of the society, and again, it helped me a lot in terms of networking, just generally increasing my confidence, And when I transitioned into the workplace, that transition became a lot easier. Because I already practiced these soft skills during my time with the society. So, for example, in the society, you're trying to arrange an event, you need 4 speakers. You reach out to 4 speakers, you network with them, you build a relationship with them, and then you bring them in to do the event. Likewise, in the workplace, you're building a relationship with not just your team, but various different teams, especially on a rotational program where you're preferencing different teams as you go along, and you want to be in different teams. You want to be in a specific team. Now, to get into that team, you need to network. You need to build a relationship with that team, with people in that team. And the best way for you to do that, is by networking, speaking to them, building a relationship, having the soft skills in place. And those skills I got from my time with society. And when I transitioned into the workplace, I was automatically at an advantage compared to other graduates who didn't have that skill, hadn't had that exposure. And that helps me because I'm able to preference the teams that I want and effectively land a place in those teams because of the networking and relation building skills that I've built from in the society. So that's for sure a positive.
Do you think being a president, I mean, the society, CUMSIS, it was over 200 people who were signed up, but let's say 80 regular members. Do you think it helped with your applications and your interviews in terms of just showing that you had it, or do you think it's more the skills that you learned were more impressive to the interviewer rather than just being president of the society? Which one do you think
I think it will be the skills, because if you go into the interview and you just say, I'm president of society, and then you leave it there, no one's going to care about it.
Yeah.
What does that show? It doesn't show anything, right? It doesn't mean anything. They want you to tell them how that's going to bring value to the company. And that's where you say, through my time as president, I built this skill, and that skill by doing this activity, that activity, and this activity. And you're giving live examples of what you've done. And that's part of the whole interview process, because you have to really sell yourself in an interview, just like a pitch. And the best way to sell yourself is by telling them what you've done, and the best way to tell them what you've done is by giving them live examples. And so, for sure, having president on my CV made my CV look good. But once you're in the interview, it doesn't matter. You've got to tell them why, why that's going to bring value to the firm. And that's where you talk about the skills and give real examples of what you've done.
Do you think it can be a little bit intimidating for some employers? I mean, I was head of one of the divisions during my time at the society. Thing I hear sometimes from recruiters or HR is that you have this title like president or head. Do you think that's fair for them to say, first of all? And if they do say it, how would you react to it? Because if you had a flashy job title, so to speak, volunteer title in a society during your time at some society, it doesn't have to be a trading society, any other society, because those skills are transferable. Do you think that has to be supported by like a vast number of examples? How do you overcome that if you get hit with that question? If it's not just examples, because essentially what happens is you're applying for an analyst, or you're going to be working in a team rather than leading the team. How do you feel about that? How do you feel personally to kind of tone yourself down, because you're used to public speaking from the society, and some other people maybe from other fields who want to transition into finance as well? How do you kind of tone that down and show that you're really ready to work in the team?
No, absolutely. I think all employers want a broad skill set. Everyone wants an all-rounder. If you're good at one thing and bad at something else, automatically, it's not what they want. So the way you tone it down, or the way I think the best way to do it, is by showing them that you've got a broad skill set. And that's where you say, you've led a team, you've also worked in a team, you've also been a leader, you've been a team player, and you give examples for both. So I think, not necessarily toning it down, but you answer the question that's asked on its merit, right? So you're asked about a time where you've worked in a team to solve a problem, for example, and you talk about that. You're asked about a time where you've taken initiative, so you talk about a time where you led a team and you took initiative. So you need to answer the question on its merit, and that's where you have to. That's just part of the interview skills, where you need to understand the question and answer it directly. But at the same time, I think it's important to understand what that company's values are. So you go onto the website, you look at their values, you look at the job description as well. So this is where you adapt, right? You adapt for the company that you're applying to, you adapt for the job that you're applying to. You need to understand the skill set that they want, and you need to, bring that in, force that into your answers. and that's the way it's done. So, for example, this is a team which requires heavy teamwork. Your teamwork is the number one skill that they want. So, in all your answers that that you're giving in an interview, you bring in teamwork to it. You say, you answer the question, whether it be leadership, whether it be initiative, whether it be problem solving, but you bring in teamwork into it, and you say, I've worked in a team to do this, I've worked in a team to do that, so on and so forth. So yeah, I think there's no easy answer to that. There's no one answer to it. I think it's a case of adapting. I think it's a case of adapting to the question, adapting to the company, understanding what values they have, and understanding the top skills that job requires, and bringing those skills, forcing those skills into your answers if you can. Yeah.
Okay. And yeah, for those that may want to go and follow this path of working and lending, essentially, can you quickly tell us about day to day, and
sure,
kind of what the job consists of, what hard skills are required as well, and if you can also say, do you need to know those hard skills before you join a grad program, or it's okay just to be motivated? Because as far as I understand, you probably as well, motivation to learn is probably more important than the hard skills you come in.
Yeah,
the junior role.
Absolutely. So in with lending, and the main thing that you do on a day-to-day basis is sort of credit analysis, and with any sort of lending transaction, you're lending money, but effectively the end goal is to sort of present a credit paper to the credit risk team, and this can be called the credit committee, or and also the investment committee as well if it's a large transaction. But effectively, you need to get the bank's approval to lend this money, and that's the end goal. In order to get that approval, you need to present the deal or the transaction, and you need to do all the analysis at hand. So you need to do the credit analysis. You need to, and this is where you do the financial analysis. You look at the debt serviceability, the debt ratios. You deep dive into the accounts. You deep dive into the industry. You understand, the business case for this deal. You understand whether that business, that industry will be in a strong position. Effectively, you want to know if that company, that business can pay back the debt. And in order for you to know that, you need to know if that industry is in a healthy position. So you do the industry analysis, you do the business analysis, you do the financial analysis, and you present this to the credit committee and the investment committee. And you're trying to get approval. You're trying to persuade them that this deal works for the bank. It fits the bank's credit policy, and we're confident that they'll be able to pay back the money, and that the debt serviceability is there. You're doing that on a day-to-day basis. So that's basically what you're doing. The other side of the transaction is sort of the execution. This is where you'll work with other teams in the bank, the operational teams, the sort of the execution teams, and so on and so forth, who will do all the operational side and the legal side as well. So you'll work with lawyers on the transaction, and that's the other side of the transaction. But the first half of it is getting the deal approved by the bank, by the credit risk team in the bank, and that's the first side. And the second side is just the execution of the transaction, where you work with internal teams and lawyers to effectively draw down the funds based on the structure of the deal, etc. And that's all the other side of the transaction. That's sort of the day-to-day role. You'll be speaking with various stakeholders, including clients, lawyers, the client's advisors, your internal teams, a transaction can take anything between sort of 2 months to up to 9, 10, 12 months, depending on the complexity, depending on any sort of problems that you encounter in between.
But you're obviously working on multiple, I presume, transactions at the time.
Yeah, you'll be working on multiple transactions, and that can range. That just depends on how busy the bank is at the time. And it's also important to note that with lending, you've got all sorts of different types of lending facilities. You've got the more vanilla loans, which is it can be where you're looking at loans under the sort of 50 million, 100 million, or 25 million mark. If you're lending a 10 million pound loan, it's going to be a lot simpler than a a 500 million or 1 billion pound syndicated facility. So on a vanilla loan, you're sort of, you've got different structures, but they're not too complicated. You could have a fixed rate, you could have a variable rate, you could have a partial amortizing loan, you could have a fully amortizing loan. You could pick a 5-year term, you could pick a 10-year term, 20-year term. These sort of things, it's not too complicated. It will be a vanilla type loan that can be transacted without too many complications or too many different teams being involved. Whereas you could be working on a larger transaction. For example, if you're lending to a private equity fund to acquire a target company in their fund for hundreds of millions of pounds, you could be working on a transaction where the loan is syndicated, where it's not just one bank lending, but rather a group of 4 or 5 banks lending, and the idea is that everyone shares the risk. So they will all lend a 500 million pound transaction. They will all lend, let's say, 100 million pound each. It's just an example, and they're all sharing the risk in that transaction. They're all, no bank wants to take on the full risk onto their balance sheet, so they'll share it, and that's the idea of that. And of course, this is now a much more complicated structure. The legal side is more complicated. The financial analysis is more complicated. The execution is more complicated. So it ranges, like I said, from a vanilla transaction, vanilla loan to a large syndicated transaction. So it's important to note that although lending is lending, and at the end of the day you are lending money, and you want to know if a debt service is there, you want to know if you're going to get your money back. The transaction can vary a lot in terms of size and complication and structure.
Yeah. Okay. Just some closing questions. We probably have time for 2. I'd like to ask something a bit more opinion based. Of course, we talk about soft skills and hard skills and like attention to detail and all the big terms. But we're all human, and mistakes do happen. And when mistakes happen while you're studying or while you're working for yourself, you don't have a boss over your neck like looking over. You don't have that stress. What happens? How do you handle mistakes? If you can give us an example, or if you've seen something happen, you don't have to give names. It doesn't have to be Lloyds. If you've seen something happen in your past experience, in the most recent, how do people handle mistakes, and what is the best way to kind of keep going?
Yeah, no, it's a tough one. It really depends as well on how big the mistake is and how much it's going to cost your employer or your team. But I think the good thing about sort of, if you're an analyst or you're a graduate, you kind of had what, you could call it the graduate card, where you're allowed to make mistakes because you're new and you're still learning, and everyone knows that. And it's kind of hard to make a big mistake at this level because your work is checked by someone. It's always checked by someone, someone else, someone more senior is taking the ultimate responsibility.
Yeah.
So in that sense, there's a safety net for you. But, you will make mistakes which are relative to you, right? Every mistake is relative. A big mistake to someone could be a small mistake to someone else. So, you might come across where you've made a big mistake, in your opinion, or for your level, right? And that could be, just a mistake in some of the analysis you've done. It could be, an email that you've sent to the wrong person. Could be in an internal process which you haven't followed properly, and it's come up on compliance, for example. Things like this, which can happen to anyone. And the important thing is to, first of all, hold your hand up and say you made the mistake. Second of all, is, you've taken responsibility for it. That's the first step. Second thing is to really make sure that you've learned from that mistake, and that it doesn't happen again. So that's one thing. You can make a mistake, but you need to make sure it doesn't happen again. And I think before you make the mistake, it's also important to really sort of proof check the activity that you're doing. So whether it's an internal process that you're doing, you need to understand what that process is. So speak to the people in your team, speak to other teams, do research on your internal intranet or whatever it may be, and find out what the actual how, what's the right way of doing this? What's the correct way of doing this? And then do it. Don't just jump straight into it because you're under pressure, because you're under time constraint. Find out the actual way, the right, correct way to do it, and then do it. And that's a mistake in itself, right? Rushing, not finding out the correct procedure. That's a mistake in itself. So, yeah, I think that's what I'd say. But generally, you can make a mistake. You're allowed to make mistakes. Just important you learn from it and that you don't make the same mistake again. That's the important thing, because people who are giving feedback on you, they'll know you made a mistake, but they'll also know if you've made the same mistake twice, and that says that you haven't learned from your mistake or you haven't paid attention to it, which is making the mistake isn't the problem. The problem is making not learning from the mistake.
Of course.
So that's what I'd say.
And for the final question, anyone who, I mean, your career is like interesting. You've done loads of stuff. It was always bulge bracket or Big Four. What are the top 3 books or top 3 sources that you read constantly that help you? It doesn't have to be related directly to what you're doing, but what helps you develop the person and what helps you with the career.
Yeah, absolutely. I think, look, as I mentioned before, I think knowledge is built over a long period. So I don't think you'll get it from reading 1 book or from reading 3 books in a week. I don't think that's how it works. Rather, you should be, constantly reading a specific source of news or knowledge or information over 2-3 years as a student to learn about the industry. So for me, I read one site which is really good, was a site called Mergers and Inquisitions. It's a guy who's an ex-investment banker, and it's his sort of business where he writes about all the different roles within banking and finance, and he interviews people who work in those roles, and he publishes those interviews in the form of an article. And the amount of information on there is phenomenal. So that's something that I've been reading for the past 3 years, and I still I'm subscribed to it. I still get emails, and I still read about different topics, and I'm still learning new things. So for sure, that's a good one. Mergers and Inquisitions. On the news front, as a student, you don't unless you enjoy reading news, you don't want to read too much, but you still understand that it's important to know the news, to understand, again, your understanding of the economy, your understanding of different topics within the news is built up over time. And something that I've been reading over the past 2 years is something called Finimize, and they'll send an email which will take about a minute or 2 to read every morning with news, and explains what the news means for the economy and for different companies. And it's explained in a very simple manner so that anyone can understand it, whether you're just starting out, whether you've been reading for 2-3 years. So Finimize is a good one. And generally, I think Google, just use Google to your advantage to search what you want and read about.
Yeah, that was the motto of QMTIS.
Exactly.
Use Google before you ask the question. I completely agree with you on.
I think keep an eye out for for events where you can go somewhere and learn about, whether it's society events, whether it's events at all the networking events at all the banks, presentation events at all the banks. So when you're a student, you'll notice that banks hold events from September to sort of January, February, where they do networking events, they do presentation events. And you should really go into the best way to find this is to go into different companies' websites, go into their events section, and you'll find a list of their events, and you'll find events which are closest to where you're located. If you're in London, you'll find events in the London office, and you should sign up for those events and go there. And that's where I think you learn the most, because not only will you hear from the people that work there who present, you'll also meet like-minded individuals, other students who are who range from first-year students to PhD students, and they'll all be there looking to learn, and you learn from speaking to them as well. So I think the best way to learn is to really go out there and meet people, and these events I think are a brilliant way to do it. Society events and networking events at different financial companies. So that's definitely one of the advice I'll give any student.
Yeah, that was great. Thank you, Hossam. That was all that we had time for. And
Thank you, Daniil.
we'll hope to have a return episode sometime in the future. You're interesting to talk to. Things you're doing sound interesting, at least to me. Probably to some people who want to go follow a similar path. So I hope to have you back someday.
Yeah, I think one last thing I'll say is just to be open-minded, because as you can see from what I've said, I've done tax, I've done commercial banking, investment banking, corporate banking, the whole range. So just keep an open mind, and you just admit that, just be humble and admit that your knowledge is limited, but there are so many different teams, so many different divisions, and you don't know if you like it until you try it. So just keep an open mind. Don't put all your eggs in one basket. And I think that's the best way you find what you actually like and what you actually want to do.
Thank you everyone for watching so much. I hope you have enjoyed. If you have any suggestions, please comment down below. Please like, share, and subscribe. And I hope to see you next week on the second episode of the CambridgeStocks podcast. And I will see you guys next time.